Now we go to the 60-minute time frame. This is just before the US Open. But what do you see before this move? What do you see? I'll tell you what I see here is we come up in this environment. That's our first reaction. That's our second reaction. That's our third reaction. So what do you see up here at the highs? Selling is improving. It's getting better. Agreed? We can see that. Crystal clear. Yeah, the selling is getting deeper, wider. We can see that the selling is improving. Then we try to come up here above these highs. And this is the attempt to break into new highs. What do you make of this during the Asian session? Very, very, very poor. We come back down. Then what happens? We hold a lower high. Is that bullish or bearish? Bearish, lower high. Then look, we get an engulfing up thrust. That brings us back down to here. This is different over here. We have a little bit of weakness because there's an inability to break on through. We hold a lower high that has an engulfing up thrust that takes us back inside the trading range. So we've had a failed attempt to break at 1, and we've retested over here at 2. We come in, look, there's an attempt to hold on these bars, 1 and bar 2. Look, attempt to hold. But what happens? Boom, we fall under it again. So this attempt to hold fails. It's crucial information. Then we come up, then we get this bar over here, and we see selling, and look, boom, we fall. This bar undercuts this attempt to hold. And it looks like a fairly decent attempt to hold, because this attempt to hold is via the US session. Now try and frame it like this, guys, what I've been echoing for the past 2 to 3 months, maybe 4 months now, is that when we have a perceived sign of strength that fails often leads to a good move. This is the best reaction that we've had. It's better than this, it's better than this, and it's better than this, because we can see buyers attempting to hold. But then it doesn't get going. We test the lower high over here. We see selling, and that one bar undercuts that attempt to hold. So with the best attempt to hold, it fails. And that is the strongest selling that we've now seen. And where are we? Well, we're in a trading range environment. So boom, we break on down. Now, I'm not saying we expect this kind of move to the downside, and I wasn't. However, it's all up here, isn't it? On the 60-minute time frame, weakness up here. We can read this, and it's very important to understand that this failed here. He closed under this attempt to hold. It's incredibly important that you can frame that and utilize that information. We come on down, we gap up over here. This is the low for yesterday, and this is the high for yesterday. Think about what this market has done. So we've come up in the 60-minute time frame during the Asian session, popped our head above. Okay, we see some selling. Look, we come down here pretty aggressive. But as we're trying to break through yesterday's low, so that's the selling to here. We come to here and look at this. There's an inability to break, and technically we're springing. And then we get a test. So coming in here, right now, what are your thoughts? We spoke about we have daily highs to work with. We've got this high. We see selling. We come on down. Then we get all of this price action, and technically we're trying to hold here on the 60-minute time frame, are we not? And we're technically springing here on a 60-minute time frame. But this last bar is a test. Look at the volume. So there is still supply in the market at yesterday's low. So we're at a critical point now. What are your thoughts going in then to the US Open? On the 60-minute time frame here, we can see attempts to hold, can't we? That's all I'm trying to convey. From a 60-minute time frame, I'm more bullish than the daily. Now let's go to the 5-minute time frame. So this is just before the US Open, and oh my word, doesn't this paint a pretty picture?